Angus, thank you so much for joining me here today.
Pleasure.
Tell me about the investment grade private credit landscape. How is it going to develop in 2026?
Yeah, it's amazing how you can just look at the conference here and see the growth in terms of the number of people, the number of institutions, the number of potential issuers, bankers, lawyers. So there's a real potential demand buildup. And I think in terms of 26, we had a record year last year. And I think you're going to see more of the same this year. I think there's probably two areas that are going to drive potential demand, at least in my mind. What we're seeing from our vantage point is really M&A in general, the unlocking of not just sponsor-backed companies, but just big M&A deals that are going to require financing. And what's interesting about private credit now is that it's not an appetizer. It's part of the entrees that you can choose from, whether it be public bonds, term loan Bs, bank loans, or private credit. And that includes investment grade private credit. So I think that's going to be a theme that we're going to be watching. And the other is just structured finance. We hear ABF talked about quite a bit, and it is continually talked about. And I think you're going to see the flow part of that in terms of esoteric grow, but you're also going to see new types of assets being brought into the market to be financed. So I think those are two areas that are really going to help, I think, shape, but also grow the market in 2026.
Yeah, and they're quite exciting assets. I mean, everybody talks about private credit and asset-backed finance.
Yeah, I mean, you have music royalties, where if you look at the music royalty market, if you will, for private placements, you don't have to go back too many years to see that there was no volume. Just this last year, you were approaching $5 billion in volume. So I think that's an area of growth. I also think the energy space and what's called PDP financing was nowhere in 2020, and it's a $5 billion market in 2025. So I think those are two examples of things that you're going to see much more of. I also think other areas where you've seen a lot of attention is in sports finance, and there'll probably be, as the environment unlocks, more debt opportunities there as well, particularly for investment grade issuers. So I think that's another area that's really interesting.
And what do you think will be the major themes that investors are going to be looking at in 2026?
Yeah, I think there's three things really that I think most investors always look at. One is how can I get more yield or more credit spread? And that's much more apparent this year versus previous years, just because credit spreads are at historical lows. Actually, you have to go back to the 1990s to see equivalent investment grade credit spreads. I think diversification is going to be a theme, as it always is, but even more so now. And I think the idea of allocation and getting better allocations for the amount of resource that you put into each underwrite is going to be another theme. And the way to balance the three of those is by finding interesting opportunities that are not quite in the main freeway, so to speak, but are off the run. And I think that's where a lot of investors are going to be focusing their efforts in 2026.
Yeah, it's almost like work smarter, not harder.
Yeah, exactly.
Yeah. So what will be the major macro events that you think might impact the market for 2026?
That's a great question. I think there's probably a couple areas that that could potentially impact the markets, good or bad. One is the economy in the U.S. in particular, as well as interest rates. I think if we have a very strong economy, that'll probably continue to help push volumes because of M&A, growth, CapEx, et cetera. I think the other area, which is a little bit out of everyone's hands, is the macro environment in regards to potential conflicts globally. Whether the U.S. decides to invade a country or vice versa to another country, that can have implications. I also think, lastly, tariffs. Tariffs will impact and continue to have some impact on how people do business on a go-forward basis. So we'll see how they all impact the market. But right now, the market feels very firm. The backdrop is benign, and people have a lot of risk to put to work.
Yeah, that's fair enough. So how do you think that the trend towards, the private equity firms coming into investment grade credit will continue?
Yeah, I think that's a big theme that's played itself out over the past 3 or 4 years. You've seen the best and the biggest private equity firms taking on insurance company money and going after investment grade private credit. And if you go back maybe 10 years, there wasn't as much of that. But what's happened is they have provided a catalyst to volumes. I think that's a good thing for the market. It's providing diversification. It's providing the ability for insurance companies to put big dollars to work where perhaps in the past they would not have been able to. I think there are also different industries that are catering to that demand: infrastructure, AI, data center build out. And I think those are areas where the private equity funds with large asset management arms can really lean in. So I think that's going to continue to play out as a topical theme. And I think the independent insurance companies need to figure out, particularly on a go-forward basis, how do they play in that? Do they play through or with? And I think it's probably a combination of both to enable them to get the volumes they need to satiate the demand for the liability side, which is the insurance products, the annuities that they're selling every day.
So lots going to happen in 2026.
I think a lot. I think it's a really good setup this year. I think people's pipelines are probably stronger than they've ever been. And I think the market is probably more risk on than it has been for a couple of years. So I think we could have another record year.
Amazing. Angus, thank you so much for bringing your insights.
No, thank you.